Friday. Oh, it's Thursday.
Happy Thursday, guys.
Happy Thursday.
Happy Thursday. Another week's flying by.
Happy autumn. Second day.
Fall.
Gotta love these days.
Absolutely beautiful. Apple picking, watching the leaves starting to change, shorter days, all the things we really look forward to. So.
It's a beautiful time of year on Cape Cod, though.
It is. And welcome everybody that's new to our show. And if you're catching us on the replay and don't know what our show is about, it's about Cape Cod real estate, Cape Cod happening, Cape Cod events. Anything else, guys?
Cape Cod people.
Cape Cod people, exactly. So Cape Cod people and all the new people that are coming here.
Yes, lots of people moving to Cape Cod.
Let's have a little chat about, how's the market?
Yes. All righty, let's do this. I'm going to share real quick some stuff. Interesting. Well, I think it's interesting. So first off, let's talk about cash buyers, and they're going over asking.
Yeah,
cash percent. The amount of cash deals is 36% of the market in August. It's pretty steady. That has pushed a lot of people out of the market that were competing with mortgages. And today we do have our guest to speak about how to position yourself with mortgages.
Exactly.
And then the over asking, 51% of the properties went over asking. That's incredible. And that's smart. And that could be just smart marketing. If you're properly pricing your property, you're getting many eyes on it. It should be a little bit under or just at what you expect the market to bear, and then let so many people get in there that they're going to either accept that price that you put on there or they're going to push it up.
Exactly. Strategic pricing.
Smart marketing. So this one's kind of a telling story, and it's a lot of numbers here, but basically what it's saying is in August, the number of the affordability index is 65% of the median household of people. 65% of the people can afford owning a home. I believe that's how it goes. So it's the median household income is 65% of what is necessary. So that's tough. That means a lot of people living on the Cape cannot purchase a house.
Right. Cannot afford it.
That is a strong indicator of a lot of second homeowners, a lot of people coming down and buying these bigger homes.
Exactly.
And pushing up the price. It's a serious situation, not just on Cape Cod, but in most areas where it's a resort area.
It is, and to that point, real quickly, Joe, I was looking on our Cape and Islands Board of Realtors stats, and I had read that with the higher priced properties selling, the buyers that are coming here with more money than they used to. So we're getting another higher level of whether it be a cash buyer or a buyer that needs financing. The larger homes are selling, they're coming with much more money.
Yeah, there are multiple. I was talking to an agent in Chatham who has a listing at $15 million listing, and it's under agreement. It was on the market, I want to say probably 90 days. I think they started at 20 mil.
Wow.
And they dropped it to 15 and went under agreement. And I looked around in that area, and there were multiple homes, all but one under agreement, over 10 mil. Yeah. And it's just there's just so much money around. It's incredible.
Yeah.
And then we've been talking about inventory. We are still desperately low. We're 49% less than last year, with only 535 single-family homes on the market and 162 condominiums. That puts it at, I think, 1.4 months of inventory. So if your house is sitting on the market for more than 1.4 months, it's too high.
Price.
It should be going. Your property should be selling.
Yep.
And days on market is dropping significantly. Here we go. 29 days is the cumulative days on market, the average. So if you're over that 29 days, something's wrong with your property, and it's the price. Because again, there's a price for every type of property.
Right.
Somebody's willing to buy your property for the right price. And that's just the history. If you're looking back since 2006, days on market is incredibly low.
It sure is.
And then we're back to percentage of list price received. We're up 100.5% is the percentage of list price, the average. And that's up 4.6%. You can see it really bumped up in the spring.
Right.
It's starting to level off.
We're starting to level off. That's what I think we're seeing, huh, Aaron?
I agree. Yeah. The market's a little bit of an ease right now.
A little bit of ease. And speaking of a little bit of ease in the market, there's a lot of spokes to the wheel of getting to the closing table. And one of the largest spokes is the financing and the lending process. So we've got a great guest this week. Joe, you want to introduce him?
I do. I like to use the spokes analogy because our guest is quite the bicyclist.
Yes, he is.
Frank Merola from Raveis Mortgage.
Welcome, Frank.
Welcome back, Frank.
Hey, everyone. Thanks for having me.
How are you doing?
I'm doing great. Enjoying the beautiful fall weather here on Cape Cod.
Have you been biking much?
Yeah, just to let everyone know, we had a great ride this week. We're part of the New England Mountain Bike Association, and our members did a fat tire bike ride at Sandy Neck Beach during the harvest full moon. And
Nice.
we started the ride at 6:30. We were heading east on the beach, and the harvest moon slowly came up over the horizon, and it was amazing. And we had lights on to finish the ride, and just what a beautiful place here we have. We're just so blessed to be on Cape Cod.
That moon was spectacular. Absolutely.
Yep.
So that's another thing on Cape Cod. Bet you didn't know you could ride fat tire bikes on Sandy Neck, right?
Yeah, absolutely beautiful. You can, a lot of people camping on the beach, a lot of people having, bonfires, and we were able to ride on the ocean side. And then on the backside of Sandy Neck, you have this place called the Horse Trails and some other single tracks. So it's just amazing how different the terrain changes, even on a place like Sandy Neck.
How many of you were out there?
We had 30 people show up. A lot of people really got excited for the full moon, and they came out in droves. It was amazing.
The moon delivered.
Yep.
The moon delivered for sure. So speaking of delivering, you do it for us and our clients every day. Tell us a little bit about what's going on.
So thanks for having me. I just want to remind everyone of my NMLS number, which is 102-0051. So what we're seeing in the mortgage world is, and you'll probably hear this in the news tomorrow or over the weekend, is that interest rates did take a slight bump up today. Jerome Powell made some comments yesterday during the Fed meeting of, and we're calling it taper tantrum, and bonds reacted adversely to that. The 10-year yield is now up to 1.43. And we'll probably see rates go up 1/8 or 1/4 point from today's reaction, which, bonds, for lack of a better word, they lost 75 basis points, which is about 1/8 or 1/4 in rate.
Wow.
Now, rates historically are still very, very low. And everybody, should be aware that, money is still, very cheap historically. We've seen, interest rates on 30-year fixed products, hover in the high 2s and low 3s. So the rates are still historically very, very low for buyers. I have been seeing that more mortgage clients are getting their offers accepted now than, say, 3 months ago. Mm-hmm. So to me, it feels like there's less bidding wars. There's less, people waiving home inspections, people going well over ask. And I feel like the mortgage clients have a better chance now of having their offer accepted than where we were 3 months ago. So it seems to be going in the right place for buyers.
Frank, can you explain the taper tantrum? What you mean by that?
Yeah, so the Fed has been alluding to this tapering where they're basically what they're saying is they're going to let rates go up in the future, and we're talking next quarter, next year. They feel that the economy is improving, that we're sort of getting past the COVID issues. So basically, what they're saying is they project that the federal funds rate will increase, and that it'll help the economy if interest rates sort of stabilize and go slightly higher. And in the mortgage world, there tends to be an overreaction to this. So today, was a bad day in terms of bonds losing ground. But here's the good news: if somebody does a 30-year fix with good credit, and they borrow $100,000, their mortgage payment, their principal and interest, is roughly $450 on that loan. Which, let's face it, some of us have car loans that are double that.
Sure.
So rates are still low, money is still cheap. If a 30-year fixed on a $400,000 loan goes from 3.0 interest rate to 3.25, that's only up $27 per month. So it's not a drastic increase. It's not going to change a lot of people's lifestyle. If it goes to up another eighth, it goes up $54. So the good news is money is still very, very cheap, historically. Loans are going through. People are getting loans. Obviously, it's not like it was 10 years ago. And there is, the QM rules where people have to prove that they can pay it back. But it's still a good environment for buyers and second home buyers and even people buying investment properties.
And can you talk about the FHA I think it's FHA regarding investment properties and second homes? I know they were putting a squeeze on that a little bit. Did they loosen that up?
So FHA is for a primary resident buyer. So on investment properties, we have been seeing the rates. They were really bad during COVID, but we have been seeing them loosen a little bit. When you're buying an investment property, I always tell borrowers if they can put more than 20% down, that's something that drastically helps their rate. The rate drastically improves just going from 20% down, to 25. And so these are some of the little guidance tips that that we can give people, along the way to finance. And there's a lot of people that want to buy investment properties. As far as second homes, the great news is the rates on second homes are the same as a primary residence. So there's no difference.
Great.
There used to be an adjustment, and they took that away. So there's no more adjustment on second homes. So, and there's a lot of second home buyers down here.
Oh yeah.
The other interesting thing too is years ago, a loan that's a jumbo loan, which right now is above, it's a weird number, 548, 250.
Right.
But a jumbo loan used to price significantly higher than a conforming loan, sometimes a half a point higher. And we've seen that tighten. So we've seen the differential between a conforming loan and a jumbo loan. Sometimes in some cases, it's only an eighth difference or a quarter. Sometimes it's no different. Where years ago, it used to be about a half a point of an increase.
That's good.
Yeah.
Talk to, if you would, to a little bit about in-house or portfolio lending. What is that? What does that mean? How could that help a buyer?
All right, so our company, William Raveis Mortgage, we're what's called a correspondent lender, which means that we can keep the loans in-house. So we underwrite it in-house. We order the appraisals through our appraisal management company. We, for lack of a better word, we keep the loan in-house from cradle to grave. So we have control of it, where a lot of brokerage companies have to send the loan out for final approval. And you basically, when you send it out, you lose control of the communication and who's doing what with the file. So the good news is we're a delegated lender, we're a correspondent lender, we can keep things in-house. There's oftentimes situations where someone's situation just doesn't quite fit in the box, or there's something unusual about the situation or the actual property that they're buying. So we do have some products for those folks that we call, portfolio lending. For example, if there's a condo that is not warrantable just because of some sort of issue with the condo, maybe one person owns multiple units, things like that. we can have a portfolio or a non-warrantable condo lender step in and try to finance that. Another thing that we have, and I've been successful lately on a few of these, is a lot of business owners. Sometimes they don't show good income on their taxes, or they may have losses on their taxes, but on their bank statements, they have a lot of money coming into their bank statements. And we have lenders that will lend based on 12 and 24 months bank statements showing good income coming into a bank statement, which that was unheard of just a couple of years ago. If you're self-employed, you had to have income on your taxes. Now we have some alternatives for those folks as well.
That's awesome.
Yeah.
Are you seeing a lot of cash out refinancing or equity lines? Is that popular now, or what's the difference between the two?
Yeah, I just want to let everybody know that, we try to focus on purchases and taking care of the agents. That's our number one goal. But we also do refinances, so we can do a refinance. And the thing that I see with refinances, it's not always about the rate. Sometimes it's, someone's ready because they need to put a roof on, or they need to pay for college education. So they'll do a cash out refinance, when that event happens. Sometimes it's divorce or separation. There's been situations where people want to go to an interest-only loan, which will drastically reduce their payment because they want to save for their retirement. So there's a lot of different situations. I've also seen situations where people want to actually get out of their home equity line of credit. They want to consolidate that. I've heard recently that some national banks have stopped issuing their home equity lines of credit. One that everybody's familiar with, it begins with a B, recently stopped issuing home equity lines of credit, and they've basically increased the rates on those HELOCs. I've heard, that the rates have gone up like 5 points on that product. So I have one client calling me who wants to get out of their HELOC right away because his interest rate is going up significantly. Sometimes a home equity line of credit, it's the right product. It's quick, it's low fees. If you have a plan to pay it off in a couple of years, it could be the right product. But sometimes there's a desperate need to get out of that as well. So we do offer home equity lines of credit in combination with the purchase. It's similar to what's called like a piggyback or an 80-10-10. So what I'm always trying to do is trying to find out how long someone's going to be in the home, what their goals are. Do they want a 10-year, 20-year, 30-year? Try to find the best product for the client.
That's great.
What else do you have that competing? There's still cash deals out there. People come to the table with cash. How can you position yourself against that with a good borrower?
Yeah. So the beauty of that is that Raveis is really innovated, and they've come out with some great programs. The most recent program is something called Raveis Purchase for sellers. And if you're interested in selling or getting a market analysis, you want to talk to your Raveis agent. But that program would basically purchase the home from a client, give them the funds that they need to make another purchase, but they could still stay in their home. But what it did was it gave them a good percentage of the equity in their home, allowed them to stay in their home, and it removed the mortgage out of their name so that there wouldn't be any DTI issues on their purchase.
Right.
We've taken that a step further and realized that a lot of buyers are getting beat out. A lot of buyers are getting beat out by cash or other offers. So we just today miraculously announced a Raveis Purchase Plus program, where if we have a pretty well qualified buyer, and they have to be, pretty well qualified, mortgage worthy, that there is a program where Raveis would actually purchase the house for them and use Raveis's funds and close in up to 7 to 14 days. And then the client would be able to put a mortgage on that home. The home gets assigned to them, sold to them down the road, and they're able to put a mortgage on that home. So it allows basically a mortgage client to be a cash buyer.
That's awesome.
So that's something that, you definitely, if you're interested in something like that, you want to talk to your Raveis agent, you can speak to me about it. We're going to be having a lot of information. You'll be seeing that. And that's just got rolled out today.
And that's Purchase Plus, Raveis Purchase Plus?
Raveis Purchase Plus, yep.
Got it.
Yep. Not everyone qualifies, so it's very important that they that they tell their agent or myself what it is that they want to do, and they can schedule a free, no obligation consultation with Raveis Purchase Plus and see if it makes sense.
That's great.
It's a great concept.
Yeah.
Nice to have that in your back pocket.
Yep.
That's awesome. I have something. It's an elementary question, but it's something that comes up a lot. As an agent, when we refer our buyers to you, explain very briefly, how quick is their pre-approval? How easy is it for them? So many people are intimidated by the pre-approval process if they've never done it before or haven't done it for a while. So can you just speak to that for a minute?
Yeah. So what I always like to do is I always like to have a phone conversation with the client so that I can take notes and I can understand the story. So, kind of ends up looking, like this. And then, what I do is I put that into my tablet and I put it into the client's folder. So I take some notes so I can understand what it is they want to do. And then I send them a link which they apply online, and they put in basic information, name, date of birth, where they work, income, assets, that type of thing.
Right.
So when the application comes to me, I match it up to my notes. And then what I always do is I send, a little proposal to the client about, if I can meet their needs and what it is that they want to do. If they like that, then what we do is we take it a step further and we bring in their credit report with their permission. And I have them upload the important documents, income documents if they're W-2, tax returns if they're self-employed, bank statements that support the cash to close, and pretty much what's needed for the mortgage. So if they can get that to me quickly, within a day or so, then we can have a certified pre-approval in just a day or so that the client's out making offers and they're confident, I'm confident, the agent's confident that the only thing that we'll need to make the mortgage go through is an appraisal. If it's tricky and they own multiple businesses and they file a K-1, a Schedule C, and they've got 9 different returns and they have to, get me the paperwork, we'll get it done as soon as the paperwork gets to us. So I am seeing that, clients do understand the urgency in this market, that there are other buyers. So I have been seeing people turn stuff around very quickly so that we can help them quickly.
If somebody comes in with a certified pre-approval, does that help shorten their time frame from offer to close?
Yeah, absolutely. Because what we're seeing in this market is you either have to pay cash, or if you're financing, you have to try to close quickly. So if we have all the documents on hand and I'm not chasing Joe borrower for his missing W-2 or missing pay stub, then we can close quickly. Appraisals are taking roughly 3 weeks or better. So, we can try to set up a closing, 30 days out, assuming that everything, goes smoothly. But definitely not chasing documents, having the paperwork up front helps us in the end.
Nice.
Yeah, and you know what? You're right. How many conversations how many emails? Like, it's a tight line, but we can do this because we have to. If you're financing, it can't be drawn out. You're cut right to the wire.
And I get it because, the excitement is in the home, shopping for the home, imagining where your furniture is, living in the beautiful home is exciting. The mortgage piece, uploading your bank statements and, that's not very exciting. So we try to, just make sure that they understand it's an important part of the process.
Well, you make it really easy.
And the underwriters are in the state and are in Massachusetts, I should say, right?
Yeah. Yeah, we have underwriters. We have a couple different offices that a lot of people are going back to the office. Some are still at home. So the company has made it through the whole COVID window, unscathed. I think our volume as a mortgage company has increased 40%, but we've been able to hire, which is difficult in this environment with hiring people, especially with coming out of COVID. But we've been able to keep up.
That's great.
Yes,
I know. I think Bill Raveis was saying this morning their sales are up 60% over last year.
Yeah, the mortgage company's done very, very well. They brought in some great talent, some great originators. They've also made the back room staffed properly so that we can handle that. So they have some lofty goals, and I was excited by today's town hall conference that they're going to be doing some billboard advertising, some TV advertising. The only thing is they're changing the color from blue to purple, so I have to get some new Raveis mortgage jerseys.
You have to get some purple shirts.
I know.
Oh, it's so exciting. I think Bill Raveis, as far as the real estate sales volume, said 60% over last year. So at $20 billion, we've done in real estate sales, which is phenomenal. So I can only imagine what percentage is the mortgage part of it, right?
Yeah.
Yeah, and we, the great thing about Raveis too is we do have the ancillary companies. So we do have the insurance division, we have the mortgage division, we have the ancillary companies, one-stop shopping. And the other great thing about today's meeting is, we always have an annual convention, and it's nice to see people. It's nice to see people again and rub elbows. And we're going to be going back to our old standby, which is Mohegan next April for a convention where I can all get together and have a great party.
Yeah, I look
that's
forward to
going to be
that.
great. We're looking forward to your Margaritaville party.
Yeah, right on.
Right.
Oh my gosh. So is there anything else other than we got new colors for Raveis Mortgage, a whole lot of activity going, anything you'd like to say to the second homeowner or the products that are
I just want to reiterate what all the agents say is, be prepared. I've seen a lot of people who want to go slow, and then all of a sudden there's this great property and they've got to be ready. So it's very, very important, to be prepared. If you're just wondering what you might be able to be pre-approved for, if you're sick of renting, if you're thinking about a second home, you can buy those with as little as 10% down. So, feel free to reach out. Always glad to help. And also, like for this little increase that we had in rates, my whole pipeline is locked. I've locked all my loans. We're able to watch the rates. We have a secondary department. We sort of know what's coming and what to do. So luckily, I won't have any clients that are shocked by that the rates have gone up because everything in my pipeline.
Thank you. My
has been
clients,
locked.
thank you.
Yeah. So we're real happy about that.
So that is fantastic. If anybody wants to reach out to Frank, right down below is his direct contact through email, and we'll put the link in the comments below as well. So again, thank you so much, Frank.
Thanks, Frank.
Thanks for having me again. Yeah, I appreciate it.
Frank.
Our quarterly update.
Okay.
So enjoy your weekend. Get on your two wheels. Where are you headed this weekend?
I'm staying nearby, so I'll be here.
Enjoy. We'll hope for good weather.
You got
Everybody have a great weekend.
Bye all.
Bye. Take care.